Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Katie Greifeld. We're counting you down to the closing bell, and here to help take us beyond the bell. It's a global simulcast with Massar and Tim Stenovec. We welcome our audiences across Bloomberg Television, Radio, Quick Take, as well as on YouTube. Carol, an interesting day here. We started off strong. We kind of faded a little bit in the later hours, but now getting a little bit of a bid here as we're just about a minute or so away from those bells.
Remember all that volatility we had last year? It feels like I've seen this movie before because we certainly saw a lot of volatility in the trade today. Having said that, if you're looking for some outperformance, I think, Tim, you talked about this earlier, some of those semiconductor names, right? We talked about that big story, that Bloomberg exclusive about China maybe paring back some of its mega investments in the chip space. Well, the stock's definitely showing some outperformance today, just pulling it up on my Bloomberg, up about 2.6% here.
We just had a great chat with Liz Young, head of investment strategy over at SoFi, and she said that, you know, the markets right now are only pricing in a soft landing. So if we look at historical comparisons to how markets have done during recessions, if we do get some sort of recession, even if it is a soft recession or a recession that's not very deep, a shallow recession, she doesn't think it's all entirely priced in right now. We could see lower on the S&P.
Well, that's the big question. I mean, what does that pricing look like? The S&P 500 off, what, 19% over the past year? How much longer until we actually fully have that factored in? It's an open question.
Yeah, she thought none of it, right, factored in.
Exactly.
Yeah.
And reminding us that historically, I mean, it could be a drawdown as much as 40% during a recession.
Yeah, but this gets us back, of course, I guess, to the big issue with what we saw in the Fed minutes today, the idea that the Fed now is also concerned here about some of the market expectations, the idea that folks are pricing in that soft landing, and more importantly, that Fed pivot in the second half of the year. And those minutes made clear that the Fed is maybe a little bit uncomfortable with that, at least as of the mid-December. Closing bells here in New York, a Dow Jones Industrial Average going to finish the day higher by 0.4%. The S&P higher by about 0.8%, while the NASDAQ higher by about 0.7%. The outperformer on the day, that belongs to some of the cyclical names. Dow Transport's up about 1.7%, and the Russell 2000, Carol, up 1.2%.
Yeah, what's interesting too, Romaine, just in these last few minutes of trading, we did see investors coming in, pushing those indexes a little bit higher, as I said, in the last few minutes of trading. Having said that, and maybe those hawkish comments by the Fed, you might put a damper. But, Katie, if you look at it, most of the names in the S&P 500 actually posted gains today.
It was the same story on the industry groups as well. Up at the top, you have autos. A lot of that is Tesla. I was off last week. I know you guys were all over that story. It's hard to follow. But in any case, Tesla is higher today. The industry group higher as well. And then, like Carol mentioned, I mean, you have semis just ripping today out of that Bloomberg reporting out of China. So a sector to watch. You go down to the bottom of the list. We have software at the bottom of the pack, down about 1%. Microsoft is the big loser there, Carol.
Katie, did you say semis are ripped?
No, I said they're ripping. They ripped today.
Just checking. All right, let's get to some of the gainers. You mentioned Tesla. Big story last year. Continues to be a big story here in the new year. But go figure. 12% drop yesterday, but gaining 5% in today's session. Kathy Woodner, ARK Investment Management, she bought big time on yesterday's drop, continuing to buy shares. She's been doing so, I should say, really since the company, Tesla, has really been paring back a lot of its gains. So she did a lot of buying in the last few months of last year as well. She bought more than 176,000 shares in that first U.S. trading day of the year. That's according to ARK's daily data. But they've acquired more than 938,000 shares of Tesla since October 3rd, when the stock really started to do a dip to the downside. Warner Brothers Discovery, this was top in the S&P 500 and NASDAQ 100, up almost 9% in today's session. Stock down still about 60% in the past 12 months. Again, I'm scratching my head because it did get a price target cut to 16 from 18 over at Macquarie, and you've got the stock rallying on the news. I don't get it. They did maintain their outperform, so we'll look for some more news maybe on Warner Brothers Discovery. Salesforce, Romaine, you talked about this earlier, up about 3.6% here.
Yeah.
Job cuts, talking about 10% of a cut to its workforce and reducing its real estate holdings. But again, I would say that investors say, hey, you're being smart. Maybe it's a downturn or it's a tougher environment this year. So how do you cut costs and Salesforce coming out?
How many strategists have we heard from who basically said that cost cutting, belt tightening, that really is going to be what drives value for some of these names. So if these companies can get behind it, maybe investors will warm.
I go back to this idea of normalization. I mean, so many people were hired at these companies during the pandemic. Look what Meta Platforms had to do just in the last couple of months. So are we going to start to see even more companies belt tightening and, getting rid of some of those employees who they did hire over the last couple of years? One company not doing so well today, Microsoft shares down 4.4% on the day. It's the biggest one-day drop since October 26. Romaine now trading at levels last seen in November. This all because of a downgrade from UBS over concerns about Microsoft Azure. UBS writing that Azure is, quote, entering a steep growth deceleration that could prove to be worse in fiscal 23 and 24 than investors are modeling. Pfizer also finishing the day down by 2.2%.
And I just want to point out, because I was actually kind of shocked by that downgrade, because I always thought Azure and really just cloud computing was kind of impenetrable, and the growth we know has been there. But I think it's interesting, if that analyst is right, and some of the other analysts are also predicting this, they're actually seeing one of the first quarterly declines in revenue potentially for Microsoft for the second quarter of the year, the fiscal second quarter, I should say, of the year. So that'll be interesting to see whether that actually materializes. Yeah,
it's interesting in the note they wrote that the business may be slowing due to maturation, not just because of a tough macro environment. So I expect to see similar notes across the environment. I mean, I'm looking at you, Amazon, for Amazon Web Services.
Actually, Pfizer. I just looked on that. I just want to make sure I get this right. So I just looked at the term. So the expectation is for 2% growth on the headline revenue numbers. But remember, they were in double digits, pretty much going back, I don't know, several years here, basically at like 14 to 20%.
All right, thanks for that, Romaine. Pfizer down 2.2% on the day today. B of A, again, another downgrade. All three of my decliners are due to downgrades. B of A seeing uncertainty over the magnitude of the revenue decline from Paxlovid in 2023 as well as the vaccine. Can I just stop you again, though?
But I mean, your comment, I think, is interesting because we talk about market sentiment. There was a slew of downgrades today, probably some of the most that I've seen in quite some time. And we talked so much late last year how analysts really hadn't revised down any of their expectations.
Right, it's like they're catching up right now.
Yeah, it's interesting, yeah.
Honeywell. How about this? A double downgrade on Honeywell today. Cut to sell from buy. Price target lowered from $220 to $193. Another one from UBS. Shares finishing lower on the day as well.
Absolutely. And just a quick check on yields here. Relatively modest, but you did see buying once again here. So a two-day rally, if you will, in the bond space here. Nevertheless, the yield move in and of itself modest, about 5 basis points
surprised,
on the longer end of the curve.
Romaine, considering that what the Fed minutes had to say, pretty hawkish, that we didn't see some bigger moves when it comes to the Treasury trade?
I think so, though. I mean,
the dollar? I don't know. Like some different things
but when we talked to Kelsey Barrow over at JP Morgan Asset Management, a couple other folks, they seem to be of the mind that there is a real buying opportunity here right now for fixed income, even if you do believe a recession is coming, even if you do believe the Fed is going to stay at 5% or longer. They are finding value right now, and I think maybe that explains at least some of the moves we've seen over the last couple of days.
But still staying higher quality, really in the investment grade market, not yet ready to step into junk as we just continue to talk about the most talked about recession that could be coming, what that means for some of those riskier credits. It seems like
is this the most talked about recession?
I mean, it feels the most talked about recession in my time as a journalist, for sure.
Oh, okay.
So, I don't know what was the most talked about recession. I'm still curious if this is going to be a shallow one and that we're going to be through it before we even realize it and, kind of off and running. I guess it's hard to say. I do feel like everybody is discounting almost the first quarter. Do we get the Fed moves all done, the final rate increases done by that first quarter, and then do we move on and start to think about the second half?
I'll go back to the labor market and the signs that we continue to get. I mean, the jobs are coming on Friday, Romaine, the most recent month for November, for December. Of course I trust it. But, I brought this up with Liz Young earlier, and she said, hey, November JOLTS data that we got today, just wait until we see December. She's not very optimistic about it, but I still think that we're seeing so much such a tight labor market that it's hard to say we're in a recession.
And the other problem, too, though, is I mean, how reliable is the data? When you consider how volatile some of the data has been, I mean, can you really draw a trend line? You know what I mean?
It's not just one data point, though. That's why, we're using
But that's the problem with the Fed, though. I mean, if you get 2 or 3 months or something in a row of something, can they trust that? Can they trust that is the trend?
They're saying they're not going to.
If we can't trust the NFP data, that really opens up a lot of existential questions. But, I mean, it does get back to what we're seeing in the headlines versus what we're seeing in the data. When we think, again, about Salesforce today, another 10% workforce cut. I mean, we've been seeing just headline after headline for months now that hasn't been showing up in the data. We know there's still a lot of openings. When that actually starts to tilt and actually show up in some of these numbers, maybe, I don't know, is it too late for the Fed?
Well, and the Microsoft and Salesforce are interesting, right? They really benefited, right, from the pivot to work from home during the pandemic, kind of all in on that. And so are we just seeing, again, I think, Tim, you were mentioning this, is this just kind of going back to normal, what we're seeing in a reset of the businesses, or is there something more problematic about the economic outlook going on?
To Katie's point, I think it was Lisa Abramowitz who said it on Surveillance last week about the idea of some of these layoffs not showing up yet in the numbers. Somebody said recently, a lot of these employees are getting severance packages. So maybe they're not filing for unemployment. So there might be some sort of lag effect, a long and variable lag, until we start to see those show up in
I've heard that
payroll
before,
numbers.
long and variable lag.
Long
I got that in there.
lags. Well, the Fed. Okay, all right. Are
You're
we
a
getting a
good
pivot?
student, said Mr. Powell.
Here's the question: what comes first? Do we get a Fed pivot, or do we get a new Speaker of the House?
New Speaker of the House, I think. That's my own prediction.
We'll check back.
If we don't have a Speaker of the House,
That's
would anyone know?
That's a great question.
Definitely.
I think we need a Twitter poll on that one.
I'm pretty confident in my answer here, guys.
All right, guys, we got to do a wrap here. That will do
Maybe
it.
Jay Powell could be Speaker of the House. You
Not
think
a
he
bad
can get a
idea.
majority vote?
When worlds collide.
I'm going to cue crickets again on that one. All right, that's a wrap for our cross-platform coverage, radio, TV, YouTube, and, of course, Bloomberg Quick Take. We do it all. Beyond the Bell. We'll see you again, same time, same place tomorrow.